All right, so welcome to our weekly virtual market analysis. Every day, my team and I meet and we look at the market and we see how many properties are coming to the market, how many properties are becoming absorbed by the market, and how many properties are selling. And so, what we've been doing for the past couple of weeks is talking to people and getting to know a little bit about where they're coming from. Our first idea, once this started, was let's figure out how people are feeling and let's just try to get a sense of where the market is. So we found that there was a wide variety of where people were landing. Some people were wanting to do business as usual, other people not so much, and then a lot of people in the middle. And so we have people who were um, trying to sell their property, and as they are selling their property this year, they're trying to gauge, well, when's the best time to be able to do this? And so we thought, all right, let's give them a lot of information. We have a lot of people who are pre-approved, and this pandemic kind of caught them midstream. So we want to be able to make sure that we're giving them up-to-date, relevant information. Then there was a lot of misinformation that was happening in regards to the Federal Reserve and 0% interest rates, and a lot of people thought that was mortgage interest rates. So it caused actually a big issue in the country. So let's hop on in. And then at the end of this, if you have particular questions, then we can kind of take it from there. So, um, and we're gonna do this every single week. But if you have particular questions, we can address them here either now or next week. So, so in Washington, D.C., we're going to do Washington, Maryland, and Virginia. In Washington, D.C., we have 193 properties that went active in 2019 during this same period, which is the last week in March. In 2020, that number has dropped to 98. The number of properties that went under contract this past week in 2019 was 182, and in 2020, this past week, it's 83. The number of properties that sold, 107 versus 105. So, what does this mean? Well, the number of listings has come down. So a lot of people we saw pulled their listings off of the market. Maybe they have a family inside and they just didn't want to show their property. Maybe they thought it wasn't a good time to sell. For one reason or another, the number of listings decreased by a matter of a half. The number of properties that went under contract. Now, this is an interesting number that we're constantly evaluating, and it's not very easy to exactly take a snapshot and say this is the case. But what we've been finding is even though the number of active contracts or active properties on the market is down, buyer confidence and demand has been relatively sustained. However, now we're working with people this week, and a lot of what we hear is there's just nothing on the market today. We're interested in buying something. Maybe we're getting pre-approved, we are pre-approved, we've made offers and we've missed out, but there's just nothing on the market. And then the last number, sold properties, really hasn't changed. The reason it hasn't changed probably is because 30 days from today, which is the average sales time, people were putting properties under contract, and this pandemic really wasn't affecting it. So we anticipate that the active properties will probably remain somewhere in this area. It might even go up a little bit here in the next couple of weeks once the chaos kind of settles down. Contracts will probably remain somewhat consistent now that the mortgage interest rate scenario is kind of a little bit under control. And solds will probably decrease because the number of properties coming to the market, and thereby the number of properties that can sell are going to diminish. So this is Washington, D.C. This is Northern Virginia. So Alexandria, Arlington, Falls Church, etc. 447 versus 252, 358 versus 226, 306 versus 287. Somewhat along the same lines. Northern Virginia, a little bit more inventory, so you're seeing the contracts are able to keep up better than where they were for Washington. And this is Montgomery and Prince George's counties. A little bit of the same. More listings means more people can catch up. I think it's kind of interesting. These listings here were staying up, whereas in some of these it wasn't necessarily staying up in Virginia and DC. So some of the properties that we're selling haven't quite sold, so we're seeing that diminish a little bit sooner over here. Here's the mortgage interest rates. So mortgage interest rates, you can tell, have been fluctuating here in the last month. They were on a downward trajectory anyways. That's because there was uncertainty in the marketplace when the coronavirus was in China, and that was creating a great investment environment. But a lot of people had the idea that this was going to hit us, and so we kind of anticipated some market volatility here. Maybe not so much over here, but this is the case. So still historically low interest rates. If you recall, the average interest rate from 1970 until now is 8.5%. The average interest rate from 1990 till now is 6.5%. So it's still a great time to be able to get into the marketplace because the cost of capital or the price of a loan, your home price, is still relatively so low compared to where we were historically. So what happened with the interest rates? Well, the Federal Reserve dropped their interest rates, which caused a refinance flurry because they did not specify that mortgages were not in the interest rate. So the general public flooded all of these banks with refinances. It was a really chaotic time for a lot of the lenders that we work with and across the country. The Federal Reserve decided to step in and buy millions of mortgage-backed securities, dailies, to be able to calm the market, create some assurance there, put some capital into it. And then the U.S. Treasury and Ginnie Mae right now are looking for short-term solutions to be able to make sure that people who have properties that are under contract and need funding can close on them. So the market being in an unknown situation, a lot of investors where we get our home loans from, a lot of this uncertainty, what exactly the government's position was going to be, whether they were going to back certain loans or not, created a lot of those loans to be able to increase in price. We're still kind of seeing it this week where interest rates are a little bit higher. They've spiked this week as opposed to last week and the week before. But many experts anticipate those interest rates coming down here in the next couple of weeks. So that's kind of where we see the resettling of the real estate market here. Lastly, this is a pricing trends for median sold properties in the last year. So you can kind of see the baseline here is the Mid-Atlantic region. That's our entire region. Prince George's County right here. Here you have Montgomery County, Alexandria, Fairfax. So what's fascinating to see here is if you look at these trends over here, you see that once the spring market gets underway, all tides kind of raise these boats here, and the prices hit their peak right about in June, and then the summer comes along, and then the fall comes back along and raises those prices again. What we saw is with these really low interest rates, a lot of people started buying a lot of houses in the January, February timeframe. So we probably won't see too much of a difference in March. We might see a little plateau, but then in April, probably you could start to see not necessarily the prices of real estate fall, but the quantity of action, the activity itself. Here's some of our favorite listings this week. So this is kind of compiled by our team. Different people are helping different folks find stuff, and so we're in the market all day, every day, and so these are kind of some of our favorites. We're going to send you a copy of this seminar, and in that is going to be this slide deck, so you can see some of these properties and why we like them. All right, so if anybody has any questions here, we can probably open it up and get to that. So everybody's just been unmuted, so could be a little bit of chaos here. But if you don't have any, oops, sorry, it looks like there's more folks. If you don't have any questions here with some of these, with any of these items that we've just went over, we'll send you this presentation. If you find it helpful, you can send it along to other. But like we said, every day we're in the market. Where the market is heading. So we continue to see the buyer confidence is strong. We continue to see listings diminish. Maybe people don't want to be selling their houses for various reasons. Don't want people to be in their houses, but we're still seeing multiple offer scenarios. Of course, we're using a lot of caution to be able to make sure that we're all being safe, cleaning down doorknobs, keeping doors open. If we're seeing properties, we're not touching them, but